Hey, what's going on YouTube, and welcome back to Tech Conversations. I am your host Guillermo. It is October 25th. Hope you're all having a great day today. As you can see, it is another green day for me, up $720 today, or about 0.6%. We'll see what the rest of the day brings us. Now in today's video, I want to talk about how to make money on Webull by using the long straddle option strategy. Very great strategy to use in a very volatile environment. So before I get into this video, all I ask is that you guys hit the like button down below and subscribe, guys. It really helps out the channel. Now, if you haven't signed up to Webull yet, go ahead and use the link in the description below to sign up and get 2 free stocks valued up to $2,000 by using my link. Keep in mind that Webull has 0 commission fees, so you don't have to worry about paying a fee anytime you open and close a contract, and it offers full extended hours trading. So you can trade full pre-market hours, which is between 4 a.m. and 9:30 a.m. Eastern time, and after hours between 4 p.m. and 8 p.m. Eastern time. So you can get into stocks before the rest of the crowd the next day. Really useful in my opinion. It's also just nice to have multiple brokers in cases where one just isn't working, or also if you just don't have unlimited day trades available to you, getting another broker will give you some more day trades. So anyways, check out Webull, again, link to it in the description below. Now, something very important to note here, and something we always take a look at, for long straddles, you do need to have level 2 options. As you can see here, level 2 for long straddles. However, you can't do the long straddle with a cash account. As you can see here, it's not allowed with a cash account. So you do need to have a margin account. But you only need to have level 2 options. Of course, if you're going to get a margin account, it's probably better to just get level 3 options so that you also have access to these more advanced option trading strategies. But anyways, you do need to have level 2 options, and you do need to have a margin account to use long straddle on Webull. Keep in mind that going from a cash account to a margin account can take a couple of weeks. So definitely get on that if you want to do that. Now let's go back here. One last thing, guys. For this video, I highly recommend using the Webull desktop app, because that's what I'm going to use for this video to get the best experience. So you go to Webull.com, you can go to the download tab up here, and then you can go and download the Webull desktop app. It's completely free, and again, I think it gives you the best experience here on Webull. So anyways, let's go over to the Webull desktop app now. Let's talk about the long straddle, how we use it, and how we can make some great money on it. So here we are. Right now we're on the watch list tab. So again, very first thing we want to do, we want to go over to the stocks tab. So if we take a look here, currently I'm on Ford Motor. So we get a nice chart of Ford Motor. Ford currently at $15.89 a share. Now, the first thing we want to do here, of course, is choose a proper stock for this strategy. With the long straddle, you will want to have stocks that are highly volatile, because you will want the stock to move quite a bit. Doesn't matter if it goes up or down. That's the nice thing about the strategy. We can make money both ways, but you do want the stock to move. So what I'm going to do is I'm actually going to go and choose ticker symbol SPCE. This is Virgin Galactic, and I'll click on this. Now keep in mind, this trade I'm going to show you is just an example, just so you guys can get a better understanding as to how it works. So don't copy this exact same trade. But SPCE is a rather volatile stock. You know, when news hits, it really tends to move a ton. So maybe, you know, we can pretend there's some news coming up on SPCE that might make the stock move a lot, right? So we could go ahead and implement a long straddle potentially on this stock. So here we are on the stock, currently at $20.45. So of course we go up here. Keep in mind there's many different options here, but we're interested in the options for this stock. So here are the options for SPCE right now. The very first thing that we want to do here is we want to choose a proper expiration date. So remember, the way this works is basically each expiration date is kind of its own collapsible and expandable section. So right now we actually have the November 26th expiration date open. Here are the options expiring on November 26th. So I can click on this drop down to collapse that. This will show me all of the available expiration dates for this stock. Again, choose a proper expiration. I'm just going to choose the closest one to us, which is October 29th. If you look under the strike, it does tell you how many days are left until that expiration. So we have 4 days left until October 29th. So I'm going to go ahead and choose that expiration. So I'll click on this to expand it and show me all the available options expiring on October 29th for SPCE here. So now that we've chosen our expiration here, the next thing I like to personally do is I don't like to see the lowest strikes on top. I actually like to start with the highest strikes on top. So I can just click here. You can order by descending, ascending. The other thing I like to do here, just so that we don't get confused, is that there's a lot of different options showing here, as you can see. So what I like to do is I like to go up here and I like to just filter it down to less strikes shown. So I'm just going to do 10 here just to give us, again, a better look at this and so we don't get too confused here. So anyways, now that we've done that, what I'm going to do is I'm going to go to the top left here where it says single, because right now we're looking at single options. So these are regular call and put options here. These are the calls. These are the puts. We don't want to deal with single call options. So I'm going to click on this here and I want to go ahead and choose the strategy that we're focusing on here today, which is going to be the long straddle. So they do have a straddle option here. So I'll go ahead and click on that. This will take me to some potential long straddle plays here. So let's take a look here. Now that we're here, keep in mind that since the long straddle includes both calls and puts, you can't filter by calls or puts, right? Because we're going to be dealing with both of these. So let's quickly talk about the long straddle, how it works, how you want to set this up. So in a long straddle, the way this works is you're going to be buying a put option and you're going to be buying a call option. They're both going to have the same expiration date and they're both going to have the exact same strike price. Okay, that's how it works here. Now, of course, we're going to be entering this trade for a debit. That's why it's called the long straddle, because you're going to have to pay to enter this trade, a debit. That's also actually going to be your max loss as well, which means there's limited risk with this strategy. Again, very important that we're always dealing with strategies that give us limited risk. I stay away from strategies that give us unlimited risk. Now, the max profit for this strategy is going to be unlimited on the upside, because theoretically the price of a stock can go up to infinity. On the downside, it's going to be limited since stocks can only go down to $0. But ultimately, like I mentioned earlier, the idea here is you will want the stock to make a big move in either direction, right? You want the stock to move up, you want it to move down, but it has to move quite a bit here. So it's kind of nice that you can make money both ways, but the downside is it does have to move quite a bit for you to start making money. So let's go ahead and let's just choose one of these. So let's say I want to choose this one right here. So as you can see, this is showing me 2020. So we're buying a call with the $20 strike. We're buying a put with the $20 strike here. We'll go ahead and click on it. Let's take a look here. So this is a straddle. Our strategy looks correct on SPCE. We're choosing the strike 2020. Now we don't want to be selling this. We want to be buying this. And then of course we chose the October 29th expiration. So if we take a look at each one of these individually, buying a call, October 29th expiration, $20 strike, buying a put, same expiration, same strike. That's a straddle there. We probably don't want to buy 10 of these. Let's just say we want to buy one here. Then the order type, again, always do limit. Don't use market. Limit will give you better control over, what's the most you're willing to pay to enter this trade. And of course, you can manually edit the limit price, which again would be what's the most you're willing to pay to enter this trade here. So once you have that here, we can take a look here and see that the premium, right? The debit we have to pay because we are entering this for a debit will be $112. That's also our max loss. Like I mentioned, max profit is unlimited. Again, it's going to be on the upside. On the downside, it's going to be, capped, since again, the stock can only drop to $0. But ultimately, we can take a look here at the graph. This is kind of what it would look like. So as you can see on expiration, the stock will have to move up to at least, 2112, or down to at least 1887. Right? But the nice thing is we can make money if it drops, we can make money if it goes up. It just has to move quite a bit here. So of course, you would go ahead and unlock your trading here, and then you could go ahead and place your order. But again, it's nice to always read also kind of what it tells you down here, because it does give you some nice information on this. However, before you actually place your order, remember, it's very important that you go into option strat and visually take a look at what this trade's going to look like. Visually see what your profit or loss will be depending on what date it is, depending on what the price of the stock is, depending on what implied volatility is. So before you actually enter this, we'll go ahead to an option strat page and take a look at what this looks like. So let's go over there and let's quickly check this out. So we'll go back to Chrome here. We'll go to a new tab here for option strat, and we'll go ahead and build that exact same trade that we just created. So let's go. This is under intermediate. Again, it's going to be straddle here. So we'll go here, click on the straddle. Again, so we chose SPCE for this example, which is Virgin Galactic. We chose our expiration date, October 29th. We went ahead and we bought a call at the $20 strike, bought a put, $20 strike, both same expiration date. So here we're paying a debit of $111. Max loss is the same, $111. Max profit, infinite on the upside. And it gives us our break evens here. So on the upside, our break even is 2111. Downside, it's 1889. And so as you can see here, ultimately, what we want to happen is for the stock to make a move either to the upside or to the downside. What we don't want to happen is for it to just basically trade sideways, right? So this is why you want to find a stock with high volatility, a stock that you expect to make quite a big move, and it doesn't matter if you're not sure which way. But ultimately, this is kind of what it would look like. So for example, if SPCE were to jump up to, around 23.30, you would make $219. If instead it dropped to like, $17.50, you would make $139. But if it's in the middle, if it's trading sideways, you will end up losing some money. Now, again, it's also nice to take a look at how implied volatility affects this. So if implied volatility starts to go down, as you can see, it'll actually affect you in a negative way. If implied volatility starts to go up, it'll actually affect you in a positive way. So this is a strategy where you want the options, the stock, implied volatility to start going up, as you can see, because that way we will start to actually make more money in different, depending on what price it is. So ultimately, implied volatility, you want it to go up when using this strategy. So anyways, that's the long straddle option strategy on Webull. If you have any questions of anything I just talked about, feel free to leave them in the comments section below. Check out the Discord, link to it in the description below. Hope you enjoyed the video. Let me know what you guys think, and I will see you guys next time.